Boom. We are live. Welcome, folks. Hope everybody survived Hurricane Henri. It missed us by a hair. Got a ton of rain here, though. Crazy. Um, all right. So, welcome aboard. Thanks for being here. And let's begin with smash that like button and and subscribe. You know the deal. Dislike, like, leave a comment, share with a friend. Larry, any storm damage by the by the Desmond domicile? Uh, no, this is my pool overflowed. That's about it. Nothing. No winds. No real winds. Um, a lot of rain. I'm sure there's going to be some flooding out there, but otherwise pretty quiet. Um, I think it really hit Rhode Island mostly. I know Tennessee got some damage done there. Anything by you in Kentucky? Hey, Bo. Hey, Bob. Hope you had a good weekend. I did. Thank you. Love your work. Thank you very much, Abel. I appreciate it very much. Okay, let's get to it. We're going to begin with the opening price action here of the futures, and we're going to segue over into the market news, economic news coming out this week. We're also going to be talking about our watch stock setting up alerts on TrendSpider, one of our sponsors. Link below, 35% discount code. And what else? We'll take requests from the audience. So let's get to it. Hey, Paul, good to see you. Let's get to it. 4-hour chart, NASDAQ, and we begin the week with a bias to the upside. In fact, we have a new daily high versus Friday, at least in the futures market. Check out the Russell 2000. The Russell, same deal here, very quiet, up slightly, biased to the upside. Looks as though we're probably going to get a continuation move up higher here. We're stair-stepping higher on the Russell, at least on a 4-hour time frame. So that implies to us that we're going to see a market where odds continue to favor bulls. We have some resistance back here that we will struggle to get through. And at current, we are stuck in a trading range. Now, I have a short position on the Russell 2000, which did very well last week. So I'm not looking to add right now on a new weekly low. I went over this with members. We did a strategy session yesterday. It's posted on the website, where if we begin to break down to new weekly lows, then I'm going to lean into the short side on the Russell. Not right now. The S&P 500. Did I do this already? No, I didn't. I did the NASDAQ before. Do we have a new daily high? No, not quite yet. We do not. But we are up. So the major indexes are up fractionally here. But it looks as though the path of least resistance, if I had to put my nickel down, is to the upside. Very similar price action here as to what we're seeing on the Russell. Higher lows. After a bit of a sell-off last week, Friday, we found a footing. Nice triangle formation here, from which we broke out of on Friday. Taking a look now from equities and moving on over to currencies. The dollar had a good week last week. Roy, hello. Franklin. The compound. And the dollar is down. It looks that way anyway. It's off of its lows. So we're down from Friday's close. But since this session opened up, initially they gapped it up, and now it's beginning to pull back here. This is only a 5-minute chart. It means pretty much nothing. I'm more focused here on the dollar to see whether or not it breaks down to new lower lows. And for those wondering why am I so concerned about the US dollar, we have a lot of positions that are on that are highly sensitive to the move in the US dollar. So we want to see the weakness in the US dollar. I'm very anal about my support levels. Come on, come on. All right, we'll leave it at that. Good, I'm satisfied. Okay. Now that we know what's going on with gold, now we want to take a look at commodities, because with the dollar showing a little bit of weakness here, you would expect to see a little bit of strength in the gold market. Click of a button, and we're down. And we're down. But we're off the lows of the session. They opened it down. It's coming back off the lows. This is a 1-hour chart. Let's take a look at a 15-minute view. Yeah, outside reversal bar here. It's only 8 minutes into the session. But we have an outside reversal bar off the lows, 15-minute time frame. I'm not a day trader. I don't put a lot of stock into this. What I do put stock into, and I discussed this with members on Friday, was the lines here in orange. And what that signifies is that what you saw last week was a strong US dollar with the exception of Friday. And knowing that historically, gold trades inversely of the US dollar because gold is priced in US dollars. So if the dollar goes up, you'd expect gold to go down. And yes, gold did go down last week, fractionally. The gold miners went down 6 times more than gold did, literally. So when you take a look at this chart and you say, man, the dollar looked really, really good last week, yet gold just stuck in a trading range. So I'm looking to see now, especially with a little bit of weakness here with the US dollar, if we could begin to break out above this upper band of resistance in orange. Because remember, it was only, 2 Sundays ago, where we got together, same exact time, same exact place, and we enjoyed, or I didn't enjoy because I was long of the gold mining stocks. I knew what the next morning would bring. We were watching gold, and we had the bear raid. There was a bear raid on here, right here, on gold. And since that point in time, we have rallied back. And my argument back then was that I suspected that what they did, because you have the new Basel III agreement, paper gold no longer has the same weight of collateral value to the Federal Reserve or to any central bank that it once did. It is now Tier 3 collateral. Physical gold is Tier 1 collateral. So the paper gold investment is no longer as attractive to these banks as it once was. So what we are looking at here is probably a lightening up by a lot of these banks of their short positions. So what they did is they sold, they leaned into their short positions, and they blew out a stack of stop loss orders in a thin market, early hours of Asian hour trade, Asian hourly trade. And they also took out a bunch of stops in the futures market. So thin trade, lots of selling pressure, wiped a lot of people out. What have they been probably doing ever since? Buying it up, covering shorts. And think about it. From 2 weeks ago, we hit a low on Monday morning of, what was the low here? 1677.9. Last tick was 1784. So we're not that far away from the ever critical 1800 mark. We close above that mark. That's really significant psychological damage that's done to shorts. So think about what's happened here. The volatility in the gold markets these past 2 weeks have been amazing. And take a look at this, what appears to be an inverted head and shoulders setup. Left shoulder, head formed initially by that bear raid, right shoulder forming, and a very, very tight trading range. I think that there's a very good chance that we break out this week on gold. Watch that 1800 mark. We're not that far away from it. We could be there tomorrow. Back to that 15-minute chart. Clearly an outside reversal bar. We'll see whether or not we get follow through on this. You may get some technical buying here. But it's got to close at the highs to cause any fear. Right now, you're seeing a little bit of pressure on gold. Let's see if it closes at the highs. Back to the 4-hour chart. Let's take a look at silver. Silver was annihilated last week. Where's my silver? Thought I had it. Okay, silver 4-hour chart, nice bar. When I take a look at this, I'm saying, okay, what we have here, assuming that we don't break down to new lower lows, is that we have an inside bar. No new high, no new low. So what I'm going to want to do here, create an alert, just to let me know if we break down to new lower lows. And what we're looking for here is a breakout above this resistance level here. Silver is very, very cheap right now. Very, very cheap. This sell-off has created one heck of a buying opportunity. I'm not saying if you have a current position, go averaging down. I'm not saying that. But if you don't have a current position in silver, then this is a great opportunity to nibble. Because when silver goes, it really, really goes like that. Meaning when it breaks out or breaks down, to be fair. So we're in a very tight trading range here. I would argue a wedge formation, and it looks as though we're catching a bid here on silver, and we're looking good. As long as that weaker US dollar stays weak and ideally gets weaker. So silver looking good. Let's take a quick peek at other precious metal names and industrial metals as well to get a feel for where everybody's at. I mean, basic materials have come under pressure of late. Copper rallying It's up 1/3 of a percentage point, a little bit more than that at the open here. We're now into the second 15-minute bar of the session. I'm not seeing a trade, though. No trades, though. But nice outside reversal bar. Same thing that we saw on gold. In fact, let's see if we close at the highs on gold. The only reason why I'm being so anal right now is that I rarely do I have call contracts, long call contracts, but I do have them going into the new trading day tomorrow. So I'm particularly anal right now. Yeah, so we closed at the highs of the 15-minute bar, which is good to see. We're pulling back now. No big deal. We're doing a retest of the breakout point. Always good to see. And for those that are out there and you're saying, what the heck is he talking about? Retest of the breakout point. What the heck does that mean? Well, what that means is that traders are OCD, obsessive compulsive disorder. I know because I have it. The first thing I look for, I know I sound like a broken record to members when they listen to me, that when I see a breakout, the first thing that comes out of my mouth, don't chase it. Don't chase it. Second thing that comes out of my mouth, let's watch for a retest of the breakout point. So what traders are doing right now is that, yeah. Okay, it's on our radar screen. Great view here. Nice 15-minute breakout. But the question is, do the bears win? Does this selling result in a failure and we close back down into this trading range? If it does, well, that's not good. But if it holds and we get a continuation breakout above this 15-minute bar, game on to the long side. You see some shorts covering there because they'll know that there's money behind this rally. Right now, early on in this 15-minute bar, bit of a struggle going on here. We'll check back in a moment. Let's take a look at, let's get away from the 15-minute charts, 4-hour charts to get that higher level view. Palladium, hammered. Down slightly. Not much to talk about here. I will say this, though, about for you guys out there trading Palladium, you're starting to see a higher low here. Despite the fact we broke down to new lower lows on price, take a look at your RSI. 4-hour time frame, higher lows. So the selling pressure is beginning to lose momentum. Moving on. Platinum. Platinum had a pretty strong close on Friday. We're down about a 1/4 percentage point now. A lot of technical damage done here. I remember when this broke. A lot of technical damage. Let's skip on over to agriculture, corn. Weak. Very, very weak. Soybeans, very weak. Agriculture under a lot of pressure here. You would know it by visiting the supermarket. Hey, Kat, long time. How you been? Thank you, Kat. The storm missed us. We got a lot of rain, but nowhere near as bad as what's happened up in Rhode Island. But we always get it. Every year we get these tropical storms, these nor'easters. Wheat, very weak. So agriculture under a lot of pressure here. Let's check in with energy. Oil had a very rough week last week. Energy stocks, one of the worst performing sectors. Oil at current is flat on the session with a bias to the upside. Oversold on a 4-hour time frame as measured by RSI. Nat gas, It also pulled back last week. But it was a bit overbought. So yeah, it's kind of weak. We're 4-hour chart. We broke down below key support after managing to recapture that support level, reversed. Not good. Not good. But still, Nat Gas has had a heck of a run in 2021. I want to check back in with the dollar quickly. It's consolidating. Euro. Euro may be poised to be putting in a higher low here. Maybe. Last chart, Japanese yen. Weak. Bearish reversal bar, 4-hour time frame. They tried to take it up. They reversed it. So what we have here is a trading range which is formed on the yen. Now the euro and the yen are the two largest components which trade against the US dollar in the Dixie basket. So as go, in particular the euro, so goes the US dollar. Inversely. Check in with Bitcoin. Bitcoin looking really, really strong here. Really, really strong. Let's take a quick peek at a weekly chart of Bitcoin. It looks like it wants to go higher. No new weekly high yet, but it looks like it wants to go higher. Good looking chart. Okay, let's take a peek at what's going on this coming week, folks. There are events that happen that we really don't see the effects on in the market for quite some time. The market, many people believe that the markets are quick to price in geopolitical risk, and they're not. I remember back when COVID was coming down the pipeline, the markets were rallying, and I couldn't believe my eyes. I knew there was going to be a supply chain disruption, so I shorted Amazon. We put on shorts right before that sell-off back in January, February, March, and April of 2020. This is a problem. This event, this horrible, horrible event, this horrible lack of leadership in Afghanistan is not going to end well. There are going to be ramifications of this event that are going to last for a long, long time. Just last night, you had a Department of Defense attack, cyber attack. We don't know where we're going to be tested next. But if you're an enemy of this country and you're looking for a time to try to poke the bear, what better time than now when you have a void of leadership? So even if you read the book, Reminiscences of a Stock Operator, and Jesse Livermore, he made a fortune off of shorting the market while it was in a big bull market. He took a contrarian view because of the San Francisco earthquake. And he said, this is going to disrupt the entire economy. The stock market ignored it for a while until it couldn't anymore. So my point is that we have so many events that are coming at us right now, whether it be COVID, whether it be Afghanistan, whether it be inflation, whether it be the debt. So many balls are in the air, and the incompetence, there's no lack of incompetence out there to mismanage and allow one of those balls that are being juggled right now to hit the ground, any one of which could send this market tumbling. So beware. Keep an eye on the news and don't automatically assume that traders are smart enough, in particular algorithms, that they're smart enough to price in a supply chain disruption. They're not. And we've seen that as recently as 2020. They're not. They're slow to react. So keep this in mind. Economic data coming out this week. First, let's go to last week's economic data. Empire Manufacturing Survey missed. Now, there are people out there that are worried about taper. They won't give you a date of when they're going to taper. But they're going to say, all they'll say is, that, yeah, we're going to taper. They're not going to tell you how much. It could be $1 billion a month. They're gonna not buy more of. So they're only going to buy $119 billion worth of mortgage-backed securities and treasuries each month, and they'll call that a taper. This is going to be the shortest tapering cycle that we have ever seen. Before they have to ease because the stock market can't handle a taper, and they need to go back to the well and prime the pumps even more than what they did before. So you're seeing the dollar rally on taper, and I think it's utterly insane to think that they are going to actually taper for real. They're non-committal. Don't listen to what they say, watch what they do. And what they're doing is nothing. They're talking a lot, but they're doing nothing except for promising what they were going to do, which is this. They are going to continue to expand their balance sheet. They have said nothing that has changed that in any form or manner. Raising rates, they're not even talking about that. Forget that. I don't even think they're talking about the dot plot anymore. So, and Empire Manufacturing Survey, weak, horrible miss last week. Retail sales, horrible miss last week. Why are we worried about a taper? Why is the dollar rallying for fear that we're going to get higher yields? The bond market's telling you the exact opposite. Bond yields were down last week. Industrial production did come in better than expected. Home building index missed just because they take out permits. I've said this before. Just because they take out permits does not mean that they need to start new builds. Building permits came in more than expected, but again, they don't need to break ground. They can just hold on to the permit. It's very expensive to build a house now. Housing starts, missed. That's inflation hitting. And we have a housing shortage. FOMC minutes, we know what happened there. Nothing. Initial jobless claims came in less worse than expected. Good to see. This coming week, we're going to get the Purchasing Managers Index for manufacturing and for services coming out tomorrow. So that's an important number. Those are important numbers. Wednesday, durable goods. Those are your washing machines, your dryers. Initial jobless claims as we get every week. We're going to get a revision for Q2's GDP on Thursday afternoon. We're also going to get the Jackson Hole meeting where they're going to do it by Zoom. It's all theater. It's all such theater. So, so all the vaccinated Fed heads, they're going to meet by Zoom. And they'll probably be wearing masks. So you can't make this stuff up. Watch on Friday. Very, very important day on Friday. More so than probably any other day. We're going to get personal income, consumer spending, and the Pimp Mac Daddy of the week, the PCE price index. This is the index that the Federal Reserve uses to do a pulse check of inflation, not the CPI. And we're going to get the Michigan Consumer Sentiment Survey. So a pretty heavy week. We're now going to have earnings trail off. We're going to have the economic data begin to take the front burner space as it normally would. And they're going to be talking about drip news out of Jackson Hole, which is going to be on Zoom. Go figure. All right, going into the new trading week, Schiller PE ratio, 38.58, continue to be second highest level relative to the 2000 peak. The Buffett indicator, I have to say, wow. We actually got less expensive last week. 2.8 versus a 2.9 standard deviation, which is still madness beyond the historical trend line. So we still remain at historically strongly overvalued levels as measured by the Buffett indicator. Jackson Hole, I tweeted this out. Want to be a grifter? Up your game because you have nothing on these guys. This is going to be a dog and pony show like you've never seen before. Going into the new trading week, keep an eye on this. The NASDAQ, this is by All-Star Charts to give them credit. NASDAQ advanced decline line advances are dramatically losing momentum. So you're seeing fewer and fewer stocks leading these markets up higher. The QQQs last week, they tried to push it positive. They just simply couldn't do it. And I think that's it. That is it. Now what we're going to do is we're going to take a look at the stocks we're watching. I'm going to set up our alerts for the new trading week, get it out of the way now so that we can go into the week with nothing else to do but go about our business. This is going to be brought to you, folks, by our friends over at TrendSpider. Folks, automate your technical analysis by using the automated tools that TrendSpider brings you. Automate your grunt work, speed up your technical analysis, and improve your accuracy. There's a link below, 35% discount code, reduce costly analytical mistakes, and find winning chart setups using their scanning tool. It's great tools. And you don't have to, they're built for you. You go into the menu of the scanners that you like, rename it your own, and go about your business. Modify if you like. I haven't created one scan of my own. I steal from everybody else's, and I make it my own. And I take credit for it. Time your trades with, I really don't do that. Time your trades with precision by using their alerts. We're going to go over their alerts now. Check out their 7-day free trial offer. They have a demo tour. I believe in it so much. I give it away free with our silver and gold level memberships. Check them out. Again, link below, 35% discount code. Let's begin. I have, we're going to go over Riot Blockchain, long, GCO, Genesco, long, Netflix, long, Alibaba. Believe it or not, yeah. I'm looking at Alibaba as a long, not quite yet. The only reason why I'm going to do it, and I'm only going to do it with call options, is because it's nearing extreme oversold levels. Also, nearing extreme oversold levels is Freshpet. These two trades, Alibaba and Freshpet, will not be long-term swing trades. They will not be investments. We're going to be in and out on a short covering rally. Probably not going to happen this week, but we're going to set up where we would be interested on TrendSpider tonight. So stick around. Let's go through it. NY Jets, hello. Naresh, hello. God, I love XRP. I went to go buy some the other day, and who is it? Coinbase. They don't sell it. You can't buy it on Coinbase anymore. So I got to figure out a place to buy it. If anybody knows, drop it in. I think maybe Binance lets you buy it. All right, let's do this. Let's begin with Riot. I began tracking Riot a few weeks ago. Let's get rid of all of these. The week of July the 30th. And I was focused on the weekly chart. And you could see that we broke out. Now, what we did last week is that we pulled all the way back down. It's close enough for government work to call this a retest of support. We did ultimately still close down on the week. I would love to see another pullback. We'll keep some sensitivity on here. And then once we begin to break out, we can look to add to the position. But if we got a pullback here, I'd be looking to nibble on the trade, open a position, daily chart. Now, the daily chart's looking really good. We broke out on Friday. Stokes is still down below 20. I'm not ready to go chasing this quite yet. I'd like to see these Stokes hook up, move back above the 50 mark. But Riot, nice consolidation here. I love the weekly chart. I like the daily chart. Not quite ready yet to go buying this, but very, very soon we may be putting Riot Blockchain on as a short-term swing trade to the long side. GCO. We're going to go to about 7 o'clock tonight, folks. So if you want to enter some symbols, I'll be more than happy to take a look at them. But I got a hard stop at 7 o'clock. All right, Genesco. Love this. This is the value of the automated trend lines. I'm going to take them off. And when you throw the automated trend lines off, they tell you a story. Boom. The story is this, is that we've been consolidating along this lower band of support for several weeks. We've tested it multiple times. It's held. This is telling us that we have a lot of bulls down here willing to bid it up. So Genesco looking really good on a weekly time frame. Add to that, what we did last week is that we broke out on a weekly time frame. I'm going to create an alert here. I want to see if we get a retrace back down to do a retest. All right, we're good. Now, I'm going to go to the daily chart now. Really nice day on Friday. Here's our alert set. Let's overlay the weekly resistance levels and support levels onto a daily chart. I screwed that up. Try that again, Bob. There you go. Okay, so the reason why I do this is that this is a daily chart with both daily resistance levels up here in solid line, but in dashed line in green and red, it's showing us where, if we buy, where to expect resistance. So if we wanted to book a profit on this trade, we get long tomorrow or whenever our alert fires off, we're going to want to know when we hit this resistance level up here, because we may want to book profits. I'm going to keep a little bit of sensitivity on there to get alerted early. And we'll keep this active for a long time. So we're using the product to not just identify where we want to buy, we want to identify where we may want to get out. And this serves as a reminder of where our resistance is. And there's the alert there. Next chart up, Netflix. Now Netflix, I haven't looked at in a long time. But I got to tell you, the chart looks really, really good. So we've been in a trading range for a while now. In fact, let's bring up a monthly chart. Pretty much all of 2021. Nothing's happened here till now. You could see that we're beginning to break out, or we have broken out. The month is not over yet. We don't know whether or not it's going to hold these gains. We'll keep an open mind, But as it stands right now, this snapshot in time, Netflix is looking really, really good. Weekly chart. So last week was a monster of a week. We ripped through not one resistance level, not two resistance levels, but three resistance levels like a hot knife through butter. Here's your higher lows. The question is, where do we want to get involved? We may retrace. So I'm going to do this. So that way I'm notified. If we retest any of these support levels, and we're good to go. Look at the Stokes. Look at this beautiful W formation down here. Higher lows. Netflix is a monster. Daily chart. Beautiful move up higher on Friday. And look at what they did. They retested two support levels on Friday. I got to tell you, this is a good-looking chart. I don't like the fact that it's leaning into the third standard deviation Bollinger Band. It is a bit ahead of itself, so allow it to pull back first. All right, maybe it'll shoot up higher for all I know on Friday, but I'll tell you right now, it's going to correct. All right, so let it pull back. It's frothy on a daily time frame. Let it pull back. Hey, Pat, what are your thoughts on PLTR buying 50 million in 100-ounce gold bars? Tells me a couple of things. One, a few things, I should say. One, they're not believers in Bitcoin. Two, meaning Bitcoin is a store of value. Two, they are wise enough to hedge their positions. And three, they're worried about inflation. So I like the fact that they did that. Fourth thing, they don't like paper gold. They don't like paper gold. So they bought the physical. They're willing to pay the storage fees. A wise move. So I like the move. Bob, we got nothing here storm-wise. Just running. Yeah, same here. It made landfall up in Rhode Island. I saw some trees down. I watched the news a little bit. The typical stuff that we get here, finally Rhode Island got. So we always get it every single year here. I got a tree down on my property. I'm surprised I still have trees left. I got a lot of them too. So Netflix looking really good. Baba. All right, so this is not your typical trade, folks. Normally I begin with the monthly, weekly charts. We're going to work backwards here. We're going to go daily, weekly, and possibly monthly. So let's take the automated trend lines off. So let's start off with this. These stocks are uninvestable. I have been of that mindset for a long, long time. These companies are robbing the U.S. investor, and the SEC is doing nothing about it. So don't expect any help from the SEC. They are robbing the value out of Alibaba. They're robbing the value out of, who was it? I posted something here. It was Alibaba, I think. They told the company, I forget what company it was. I don't think it was Alibaba, now I'm thinking about it. They made X amount of money, and the CCP sent them a bill, said, hey, listen, you got to contribute to the National Fund for whatever. Basically, redistribution of wealth. they were required to pay more money than they earned for that quarter. So this is a U.S. traded stock being looted by the CCP. How can you buy these stocks? I have no idea. So that doesn't mean that you're not going to get a short covering rally. So Alibaba, RSI, let's bring up RSI here. RSI, why does it not look right? That's better. Okay, RSI now is at 19.25. So it just makes it onto our radar screen as being an extreme oversold stock. I like, on a major cap name like Alibaba, I like a 15 handle on RSI, give or take. In this instance here, I want to make sure that I buy this thing using call options because I want to have a defined risk trade. I want to know when I go into that trade exactly what my maximum loss is going to be. Because I don't want to wake up one day hearing that Alibaba got sent a bill for $20 billion by the CCP and the shares are wiped out. And don't put it past them. So the question is, at what point do you go buying Alibaba? Well, first off, you want to identify, do you think that it's going lower? Friday outside reversal bar, yeah, it's going lower. So where to from here? That takes me back to a monthly chart. Let's get rid of this. Because I want to know where we have historical support below. And I'm eyeballing here. 129.72. And that's a good ways away from where we closed on Friday. But for me to get involved with this stock, given the risk I would have to take, they're going to have to give it to me at a really, really good price. Or else I don't trade it. And the key to trading extreme oversold stocks is you got to leg in. You can get out all at once, but you got to leg into the trade. Nibble, nibble, nibble. And don't buy until the end of the trading day because they'll spike this stock midday. Look what they did last week. I'll go to it in a moment. Or on Friday. They spiked it up higher in the morning. What did they do? Hammered people into the close. Now, another support level that may be interesting is here at 148.40. But if I were to execute a trade at that level, it would be a far smaller trade than what I would put on should we head down to that primary support level I just set up earlier. That's number one of two. That just lets me know that there's a better support level below. If things don't look pretty, I'll wait. I'll wait for it to hit that support level. And the reason why we look to buy at these support levels is because we want to have buyers of like mind. Remember, I'm still a little guy. So we want to have institutional money help defend our position should we put one on. And you're going to find those guys at historical support levels. And our alerts are set. The weekly chart is telling us we're going lower. And if we don't go lower and they pop it up higher, I'll avoid the trade. It goes away. I won't even think twice about it. These, to me, Alibaba, all these stocks are uninvestable. They're dead money. That does not mean that they're not going to get short covering rallies. FRPT, Fresh Pet, is the next and last watch stock for the new trading week. Now, RSI here is at around 20. I think it's got a 19 here. Yeah, 19.89. I need to get a lower RSI. And you're seeing on this chart, while we had two back-to-back up days, what's missing here, you can see using the automated trend lines, they bounced it right off. I don't think this holds because the market is telling you, using the candlesticks, that each one of these rallies was met with selling pressure. What was support back here, is now acting as resistance at the 130 mark. So I think that this is going to break because weak stocks tend to get weaker. So this is not a bargain yet. Let's take a look at a monthly chart to identify where we may have, what's taking so long here? Where we may have historical, what the heck just happened? Historical support. All right, monthly chart. And you can see that at current, we're going to probe monthly support, the moving averages. What is this here? That's a 20-period moving average. Let's go to a weekly chart. We'll come back to the monthly chart. The weekly chart is telling us, using the automated trend lines, take them off, put them back on, that we have support below. Now, this may hold. If it doesn't hold, I won't execute the trade. I'm not interested. I need this to go lower. Now, where would I be interested? I want to be where there are buyers of like mind that are willing to support the stock at much lower prices. Because I want to take advantage of a short covering rally. The however is, I want to make sure that the risk reward is in my favor. $102 per share looks interesting. And it may never get there, but you'll be surprised by how many of them do get to you, these crazy support levels that initially you think that they're not going to hit them. It's pie in the sky. All of a sudden, one day, your alert goes off. Oh my God, look at this. It happened. But remember, this just barely makes it onto our radar screen. I'm going to want to see RSI below 15 on this stock. I'll leave it alone. Excuse me. And we're good to go. Keep this active for a month, and we'll see what happens. And that is it for our watch stocks. We're good to go. Jody, hello. No worries. All right, so Paul, REV. What was that, Revlon? Yep. Good old Ron Perlman. Is Ron Perlman still with that company? Monthly chart, you have a ton of resistance above. $12.38, a lot of resistance. I can't believe this is selling with a 12 handle. I guess it's because Ron had to pay out for so many divorces. Monthly chart, RSI looking good, but price is not good. We're stuck in a trading range here. Stokes look good. Weekly chart. you're stuck in a trading range here, and you're in the middle of that trading range, I wouldn't be a buyer until we closed above $12.38 per share. And we'll keep it active for, I don't know, 24 days sounds good. Now, what else I'd be looking for here on Revlon is a breakout above this declining upper band of resistance. I wouldn't buy it there on that breakout. I would watch it closely, but I'd still wait for the breakout above $12.38 per share, and more importantly, a close above that mark. Weekly Stokes are very oversold, and we may be putting in a higher low. Daily chart. Now the daily chart's looking interesting. It's flirting with a breakout on a daily time frame and on a weekly time frame. We're not there yet. Your Stokes are hooking up. RSI is beginning to hook up. So it's looking interesting, but it's still speculative to buy it here. So I would wait for a close above $12.38. And if I can ask you folks, if you could please smash that like button. It helps me out with the YouTube algo. I would really, really appreciate it. Thank you very much. All right. What's Paul's other one? TLS. Not much data here on a monthly time frame, but with what we do have, it looks pretty good. We have seen a retracement. These wicks, shadows, bottoming tails, whatever you want to call them cupcakes. The retest of the support level now in green is very bullish. I don't think we're going to get tested again there. This is a very nice candlestick. I mean, they hammered this stock, and now it's up on the month. I love that. If we close out the month at the highs of the month, very bullish event. Weekly chart. We broke out last week. RSI, hockey sticking up, looking good. It's broken out. Let's get rid of this, taking up space here. We broke out on price in more ways than one. We have the automated trend line down here in blue. We recaptured it. You have my manually drawn resistance level or support level. We recaptured that. We broke out above the declining upper band of resistance, very strong. What I'd be looking for here is a retrace back down to retest, support the breakout point. I think it's going to happen. I think it's a good thing if it does happen. So if we retrace this coming week back down, and this alert fires off, and by Friday we hold this breakout point, meaning we don't break back down below it, that's game on to the long side. Because you know, going back to that weekly chart for a moment, you know right where to set your stop. You break down below the support level here in blue, you get out. You stay small on the opening position. If it fails and it breaks down, you know exactly where to put your stop. First out, best out. Daily chart, very, very nice setup here. Again, the automated trend line, take it off, put it back on. So we broke on Friday above 3 resistance levels. Very nice chart. Stokes are rising. Very bullish. Telos, TLS, the symbol. XRP. I don't know if they gave me crypto on here. I gotta ask them. They changed up the crypto. I'm not confident with selecting any one of these right now. I got to ask Jake over at TrendSpider which one to choose. I'm going to use stock charts for this because I want to make sure I'm confident with what I'm saying. I mean, the wealth of selections, XRP versus any number of issues is wonderful, but I want to make sure I'm picking the right one. Let's go with a weekly chart, XRP. This is a real live chart right now. We're down so far on the new trading week, but I'd be looking for a breakout here. We're right there. So XRP, I mentioned earlier, I want to buy XRP. But unfortunately, Coinbase no longer sells it. Daily chart. Doji star formation. Oh, so maybe the weekly chart is not updated. Let's go back to that. Yeah, okay. So the weekly, this is not real time. This is not real time. The daily chart is real time. So that makes sense. Okay, so we have a doji star formation so far on the session. I like the chart. I have to say I like the chart. We're at resistance. I wouldn't buy it now, but I'd buy it on a weekly breakout. We're right there. So a few trading days left to go. We'll see how we close out the week. If we get that weekly breakout, it's going up higher. I mean, XRP is a real deal because it allows the big banks, and this is why the SEC is so in their business, it allows the big banks to transfer money like that, not 3 days, like that. Like if they want to transfer money through the SWIFT system, it settles in 3 days. It's crazy. So you're better off taking a briefcase full of cash and flying it over to Europe or wherever you want to send your money. It gets there quicker rather than through the SWIFT system. So XRP looking very, very good. I got time for one more. Naresh. Anthony, hi. Try Robinhood. Bob, they may... Oh, okay, thanks, Anthony. Gemini, Naresh? Okay. I'm on a hard stop here, Naresh. I'm going to take your first one. WSM. I'm already over. Williams Sonoma. Where does the hour go? It goes like this. I swear to God, I come on here every Sunday night. I'm wondering, what am I going to talk about? Do I have enough to talk about anything? Sure enough, the hour goes by like that. Good looking chart. So here's the value of the automated trend lines, right? Take it off. Right there. Boom. We broke down the week of... This is a monthly chart. Sorry. We broke down in June. Below support. We've been trying to recapture. I would not buy this stock right now. When would I? Well, we'll only have a few trading days left to go. If we manage to close above monthly resistance, that would be sexy stuff. I like the chart, though. It's too bad it broke down here. Stokes are beginning to flatten out, which is good. You don't want to see Stokes declining. Weekly chart. We broke out above a resistance level. Again, the automated trend lines, take them off, put them on, and there you have it. We're respecting this lower band of support. If by chance we happen to retest this support level here, I'd be interested. I want to say possible. It really all depends upon the health of the overall market. I don't need to go 40 days. But ideally, we break out above this upper band here at around 171 per share. And we close at 163.52 thereabouts. So WSM looking good. Let's finish off with the daily chart here. Very nice day on Friday. It held support. We broke out. Looks as though we're going higher. Williams-Sonoma, bullish. I like Ripple, Pat, because the big banks, it's got utility. The big banks are able to transfer huge blocks of cash a lot faster than the SWIFT system. That's a U.S. payment system. Literally by in minutes, seconds, that cash transfer settles. Whereas with the SWIFT system, it could take up to 3 days. So that's why I like XRP. It's got utility. Naresh, Williams-Sonoma, I assume you're talking about his earnings next week? Okay, thanks for that. Good info. All right, folks, if you could smash that like button, appreciate it. Thanks for joining in. I appreciate your time here every Sunday. Everybody have a profitable trading week this coming week. Stay well, and I'll talk to you soon. Be well.